The committee will come to order without objection. The chair is authorized to declare a recess of the committee at any time. This hearing is entitled The Dodd-Frank Act, 5 Years Later, Are We More Prosperous? This is the second of 3 hearings examining the impact of Dodd-Frank, the other 2 being styled Are We More Stable? And the next hearing will be styled Are We More Free? Chair wishes to alert all members that the chair intends to close the hearing and adjourn at 1 p.m. The chair now recognizes himself for 3 minutes to give an opening statement. Under the Obama economic strategy, of which Dodd-Frank is a central pillar, our anemic recovery, has created 12.1 million fewer jobs than the average recovery since World War II. For more than a year now, the share of able-bodied Americans in the labor force has hovered at the lowest level in nearly 40 years. Small business startups are at the lowest level of a generation. Had this recovery simply been as strong as average previous ones, middle-income families would have nearly $12,000 more in annual income, and 1.6 million more of our fellow Americans would have escaped poverty. This is simply unacceptable. But more than the numbers, my constituents' angst tells me all I need to know. One wrote me not long ago, quote, "There are part-time jobs around my area, but always jobs with no benefits in less than 40 hours. My son is a disabled Iraqi Freedom Combat veteran who has lost hope of a decent full-time job." I suspect most members of Congress, unfortunately, still receive letters just like these. The painful truth is that Dodd-Frank and the hyper-regulated Obama economy are failing low and moderate income Americans who simply want their fair shot at economic opportunity and financial security. As we know, recent Federal Reserve report states that within a few years, roughly 1/3 of all Black and Hispanic borrowers may find themselves disqualified from obtaining a mortgage to buy a home because of Dodd-Frank's qualified mortgage rule, which is based solely on a rigid debt-to-income requirement. Because of Dodd-Frank, free checking at banks has been cut in half. Furthermore, according to the FDIC, more than 9 million households don't have a checking or savings account, principally because account fees are too high or unpredictable, another consequence of Dodd-Frank. Dodd-Frank's 2,300 pages launched a salvo of consequences that have crippled growth. It was advertised to target Wall Street, but instead it has hit Main Street. It has had pernicious effects on small businesses and community financial institutions, which are the lifeblood of the Main Street economy. Community banks and credit unions supply the bulk of small business and agricultural loans, but the combined weight of Dodd-Frank's 400 regulations is dragging them down. We are losing 1 community financial institution a day. But Dodd-Frank goes far beyond banks and credit unions. Its corporate governance provisions hit every public company in America. Grocery chains, cable TV servers, bowling alley chains. They didn't cause the financial meltdown, but still must comply with regulations imposing wage controls, salary ratios, and private compensation disclosures made for big Wall Street firms. Every dollar these businesses are forced to spend on hiring lawyers and accountants to help explain this gibberish is taken out of working people's wages and capital expansion. No wonder the economy limps along at 2% GDP growth, far below its historic norm. And no wonder low and moderate income Americans lose sleep at night, worrying about their stagnant wages, smaller bank accounts, and children's future. Hardworking Americans deserve better than Dodd-Frank. Chair now recognizes the ranking member for 5 minutes for an opening statement.